Viewers at home, you are welcome to my presentation on business risk model. Business risk model. If you are just coming across this YouTube channel for the first time, or if you have not subscribed in the past, please hit the red subscribe button and turn on the notification bell icon so that you don't miss my upcoming videos. If you are a returning subscriber, I say thank you and God bless you. What do you mean by business risk? Business risk is the risk that arises at all levels of the business activity. It is the risk that the entity will not be able to achieve its objectives. Business risk is the risk that the entity will not be able to achieve its objectives. Business risk will be categorized into three. Classification of business risk. Number one, we have financial risk. Financial risk. Number two, we have operating risk. Number three, we have compliance risk. Financial risk, operating risk, and compliance risk. So what do we mean by financial risk? Financial risk are the risk that arises from the financial activities of the business. Risk that arises from the financial activities of the business. That is, they arise by nature of the ways the business are to be financed. Financial risks are the risks that arise from the way the business are financed. They arise from the financial activities of the business. Examples is investment risk, e.g. investment risk. So I want to examine different forms of financial risk. Number one is going concern risk. Going concern risk. The risk that arises or that jeopardizes the chances of the business to exist in the foreseeable future. That is going concern risk. Maybe due to liquidation. So number two, we have the market risk. Market risk. So it may be due to the size of the market or due to an influx of competitors into the market. Number three is overtrading. Overtrading risk. Overtrading risk. When the entity is carrying out too much business activities with too little capital. The capital they are using for their business is not enough to cope with the levels at which they are operating in their business. Number three, we have the credit risk. Credit risk. Credit risk. Then number four, we have the interest, and number five, interest rate risk. And then we also have cost of capital. Cost of capital. All risks that are connected with the financial activities of the business are said to be financial risk. Then we also have the treasury risk. Treasury risk. Number two, operating risk. Operating risk. Operating risk is the risk that arises from the operation of the business. The risk that arise from the operation of the business are said to be the operating risk. Operating risk is the risk that arise from the regular activities of the business. Risk that arise from the regular activities of the business. Examples of operating risk: we have loss of orders. Loss of orders. Number 2, we have loss of key personnel. Loss of key personnel. Number 3, we have physical damages to assets. Physical damages to assets. Four, we have poor brand management. Number 4, we have poor brand management. Number 5, we have changes in technology. Changes in technology. Then we also have stocks out or stock out. These are examples of operating risk. Number 3, we have compliance risk. Compliance risk. Compliance risk is the risk that arise from non-compliance with laws, regulations, policies, procedures, and contracts. The risk of non-compliance with regulations, the risk of non-compliance with laws, the risk of non-compliance with the terms of the contract, the risk of non-compliance with policies. As said, so all these are compliance risk. Risk of non-compliance with laws and others are compliance risk. Examples of compliance risk is the risk of breaches of company law. Breach of company laws. Breach of company laws. So it falls under this category. Breach of company law. Then we have non-compliance with accounting standards. Non-compliance with accounting standards. So that is compliance risk. Then risk of non-compliance with listing rules. Listing rules. So the rules of listing in stock market or inventory market. Then we also have the risk of non-compliance with taxation laws or taxation rules. Non-compliance. Then we also have the risk of non-compliance with health and safety. Health and safety. Then we also have the risk of non-compliance with environmental regulations. Environmental regulations. And the risk of litigation or litigation risk against client. Against client. Litigation risk against client. All these are said to be compliance risk. Having examined the 3 different forms or classification of business risk, which include the financial risk, operating risk, and compliance risk, I therefore want to solve examination question as work example. Example: you are using business risk model in statutory audit of a major international pharmaceutical company. You are told that key determinants of profitability is the development of new types of drug which are superior to those of competitors. This is achieved by significant investment in research and development, R&D. However, you are also informed that such drugs may take as many as 10 years before gaining regulatory approval for use. One major research and development project is joint venture with another pharmaceutical company. Requirement: outline the key risk facing the company. Now, since they are using business risk model, so that means you have to identify the business risk. So to answer this question, the first thing is to identify the key requirements or the key factors in this question that may likely pose a threat to this organization. That is, that may jeopardize this entity, this pharmaceutical company, chances of achieving their objectives. Remember, I told you that business risk are the risks that the entity may not be able to achieve its objective. So what are those risks? What are those things that will jeopardize the chances of the pharmaceutical company from or in achieving its objective? Now, let's identify the key things. Now, you are told that the key determinants of profitability. So your focus is profitability. Is the development of new types of drug. You want to develop a new drug which are superior to those of competitors. There are competitors here. Competitor could jeopardize the chance of the entity from achieving its objectives. This is achieved by significant investment in research and development. Investment in research and development. Remember, the investment may not be successful. So, where it is not successful, it poses risk to the entity. However, you are also informed that such drugs may take as many as 10 years before gaining regulatory approval. So, it is going to take a very long time before it will be approved. So, in that case, it is also a risk to the entity. One major research and development project is joint venture. There is a joint venture. What if it is not successful? Or what if the joint venture fails? So it is also a risk with another pharmaceutical company. Now you have to identify the key risks facing the company. So you want to identify the business risk facing this company. Now let's have the solution. Solution. Risk. The business risk facing the pharmaceutical company. Business risk facing the pharmaceutical company include: number one, risk of failure of internal research and development project. If the project fails, so it poses a risk. That is failure of internal research and development project. Risk of failure of internal research and development that is, the research and development project may not be successful. So where it is not successful, then it automatically poses a significant business risk to the entity. 2. Risk of excessive expenditure on the research and development. So meaning that they might spend heavy amount of money on that research and development. Risk of excessive expenditure on R&D, research and development projects, where heavy money is spent on it, and remember the project may not even be successful. That automatically poses a risk. Now, remember, they want to invest into a new drugs. They want to invest in a new drugs, and that might lead to reduction in the production of the existing drug. Insufficient new drugs in the pipeline to sustain profitability. Where there are no sufficient new drugs in the pipeline to sustain profitability, that poses a significant business risk. Insufficient new drugs in the pipeline. Number 3, insufficient new drug in the pipeline to sustain profitability. That is also a risk to the entity. Number 4. Number 4. Development of new drugs by the competitor. The competitor may decide to develop the new drug. That is, they might imitate the company. And where that happens, it poses a significant risk to the entity. Development of the new drug by the competitors. So that is also a risk. Number 5, they want to enter into a joint venture. One major research and development project is a joint venture with another pharmaceutical company. What if the joint venture fails? Failure of the joint venture, or disagreement between the joint venturer. Disagreement might jeopardize or might lead to the failure of the joint venture. So that is also a risk to the entity. Number 6, inadequate financial resources to sustain the research and development. They needed money to finance it. What if they don't have financial resources to finance it? They did not have enough resources to finance it. That also poses a significant risk. Inadequate financial resources. Inadequate financial resources to sustain the research. 7, risk of changes in health spending, where the health spending, where it changes adversely, where it doesn't change in favor of the entity. So it poses a significant risk to the entity. Number 8, the government regulation on major geographical markets might change, and it will pose a significant risk to the entity. Risk of changes in government regulation in major geographical market. This will pose a significant risk to the entity. So, having examined the risk this entity might face, so I've considered the business risk. I've categorized business risk into three: the financial risk, operating risk, and compliance risk. Changes in government regulation is one of the compliance risk. Changes in law, government regulations, so it's a compliance risk, which is part of the business risk. The business risk, I've categorized it into three: the financial risk, those ones that will distort the operation of the business and that affect the financial activities of the business. I also examined the operating risk, those risks that will distort the operation of the business. I've also examined the compliance risk, the risk of non-compliance with the laws and others. So all these are business risk. So if you have not subscribed, don't forget to subscribe. Also like, share it with others. So thanks for watching ICAG.